Hey, good morning, MAP, your MAP Investments. Doing a recap here of the week in regards to market and economic news, etc. Been behind the ball on the videos, but we've had some action. I haven't done one in 3 days, but we've had some action this week with the ups and downs of the market. So I've been busy with the trades. Um, See how many trades I did this week. Let me pull up. The calendar here. Computer's a little slow. I look into maybe I have a desktop. But I look into. I've been doing my trading on a laptop that I bought. It's a lot faster than this desktop. I think I'm gonna see if I can alter this desktop, maybe configure it and make it a little bit faster because I like working from the desktop. But I connect the laptop to this monitor, the big monitor I have, and it's working great. But I need to figure it out every time I connect it. And I can't do videos on it for some reason. It goes black the screen. Um, Anyways, that's more technical advanced. I'm not no tech geek. I really have to do my research for that. So Monday through the 14th. So let's see how many trades I got here. So I did about 347 trades this week. So a little lighter, but we had less earnings on the week. Um, let's take a look at the futures. Um, so what happened was, let's talk about this the market in general. Um, I think it was on Tuesday. Let's pull up the Nasdaq chart. I'll just do the micros because that's what I trade, and we'll pull up the 5-day chart here on TOS. So this was on the 10th, Monday. I think Tuesday we got the inflation report, and the Nasdaq, especially in that, well, the markets in general didn't like it, especially in Nasdaq. You can see here that the Nasdaq was at 13,750, and it went all the way down to basically here was the low under 13,000. We got a bounce here, and then we continued down to 12,9. Now we're back up to 13,4. Um, that was on the inflation news. Um, the market got scared because with inflation they think that the Fed is going to have to raise rates eventually to catch up with inflation and keep things under control. I don't see that happening. I personally don't think they can because of all the debt that we have, and our economy is based. It's a debt-driven economy based on low interest rates. So I don't see that happening. But the market thought it was, but it bounced back at the end of the week. So taking a look at the Nasdaq here, the Nasdaq sliced through the 50-day moving average, which was 326.44 on the QQQs, which is the ETF for the Nasdaq, and it bounced back right back up to that 50-day moving line yesterday. So we shall see how we open up Sunday evening. We'll see how the futures open up and get a gauge on what direction the market's gonna go. I did a lot of positions in a lot of beat up names because if you look at this, we haven't been here for a while. Well, at least 50 days because 50 days is a moving average. So 303 is the 200-day. Who knows if we can get there? That would be very painful if we did. Um, I see there's a lot of tech plays out there, and I put a lot of tech positions on via broken wing butterflies and put credit spreads, etc. This week, I mean, with all the volatility and everything, I managed to stay pretty much unchanged. Uh, I wish I would have done a little bit of better job. And this is, that's the beauty about trading. Um, that every day is a learning experience, and the more you do it, and the more engaged you are, the better you get at it. Um, I'm still holding nice gains through mid-May for the year. I've definitely left some money on the table, but that's the way trading goes. And if I could look back at my past couple of weeks, that I could have done better. I could have done a better job of baiting, weighting my portfolio and knowing my risk out there in the marketplace. Um, right now, my deltas right here, delta. Always need to look at this. This tells you how much exposure you have when you if you trade on a TOS platform. You want to beta weight your portfolio versus SPY. And basically, what this does is it tells you how much exposure you have to the broader market, which is the SPY, which is 500 companies, right? Right now, my deltas are 830, so I'm pretty heavy on the long side. So if I see what I need to do is if I see any selling pressure or anything that may hamper my positions, I just need to know that if I hedge my portfolio, I just need to know how to hedge my portfolio quicker. I know how to do it. I just need to react. I hate selling them when they're down because usually bounce back up. Look at the S&P up 66 on Friday. But just so you get a little knowledge in regards to how to beta away your portfolio. Um, for example, I'm long 830 deltas, right? If I sell one S&P contract, if I sell it, means I'm short. That'll take away 500 deltas from here. That'll make me 330. So if I were to sell two of these, then this would be 1,000 negative deltas minus the 830. So I would be net short about 170 deltas. I hope that helps. I hope you understand that. So this is 500 deltas. The bigger contracts are about 500 deltas. The smaller ones, like the micros, this is 50. I think the Nasdaq 70, but for the most part, these are 50. Um, I'll make this video titled Beta Weighting because I think it's so instrumental in what you do on a daily basis as a trader and even as a long-term investor. If you have a portfolio of stocks and you don't feel comfortable with the market direction or what's going on and the uncertainty, then it is always prudent to know how to hedge your whole portfolio. Um, Obviously, with hedging comes, limited gains because what you're doing is right now, if the market goes up Monday, I'll have a good day because obviously I'm long 800 plus deltas, right? So if you wanted to neutralize your portfolio and be basically flat, is what they call it, um, then you would sell, for example, if you had 800 deltas, you could sell one of the S&P 500 big contracts, that's 500, and maybe do, you know, uh, five of these, and that'll put you almost at flat because five of these would be 250. That'll be 750. Remember, these are a tenth of the big one. So five of these would be 250, 10 of these would be 1,000. I'm sorry, 500. 500. So, um, so five of these would be 250, and the big one would be 750, and that basically would make me flat on the exposure part, just a little bit long, 80. I would have 80 long. So hope hope that helps you out on the TOS platform how to beta weight, and you can beta weight to anything. I, I what they recommend is use SPY, but you can beta weight to the triple Qs, which in my case it might be higher because I have 1,000 now. because I went heavy tech on the sell-off. That's where I thought the deals were. Um, so that's baiting waiting. Let's take a look at the other indexes, the ETFs. You have the Dow Jones, which the Dow Jones is hanging in there and it's over the 50-day moving average and it's looking better than the other indexes. Hit about 350 and pulled back. The 50-day is 334. So it didn't even hit it and it came back up. So and the reason why the Dow Jones um is doing better is because it has more, supposedly more pricing ability in the 30 stocks have more pricing ability and autonomy to raise cost in an inflationary environment. And there's banks and there's industrials, chemicals, stuff like that. So uh, bigger banks, etc. The small caps have not been acting well. They're still under the 50-day moving average of 222. They're at 221. Hit this area here of support. The 200-day is 190, so it's a long way down there. That would be a big correction. Um, so we're basically right under the 50-day. So we shall see what happens next week. And then we have the SPY. The SPY is acting well. It's still over the 50-day. As you can see, it hit the 50-day here and it bounced back up nicely. So these are your indexes. We can go over here to the futures and take a look at the performance year to date on these futures. Um, on all these underlying assets, you have lumber at 93%, ethanol 63, soybean 59, lean hogs 54%, gasoline 51%, canola 41%, heating oil 37%. All of these products are very thinly traded and very hard uh, to do them via futures. My advice is try and find uh, underlying stocks that may have options and liquidity in their options that are correlated to these products. Like for lumber, you can go with WY. Uh, Obviously, energy, you can go with like the XLE ETF or ExxonMobil or Chevron. Um, Lean hogs, I mean, can try and play it through maybe Tyson Foods. Just trying to open up your brainstorm and open up your mind on how to get into uh, positions that have correlation with these futures and their performance, etc. Corn is up 33%. Copper is up 32%. So if you want to play copper, a nice copper name would be Freeport McMoran. Um, Soybeans, all the grains, you could play them maybe through John Deere or Mosaic, which seem to be doing very nicely. Um, Palladium and platinum, I like to play them through a company called I think it's SBSW. It's a miner. They're one of the largest miners. Sibani Stillwater. If you, I don't know if I'm saying it correctly, but here's the chart. They're one of the biggest miners of platinum and palladium in the world. It's actually under the 50-day moving average, um, but this might be a decent one. Um, Natural gas. There's a lot of natural gas players out there. Coffee. I mean, maybe you want to play it through Starbucks. So we have the small caps are up 12% year to date, over 12%. The Dow Jones is up over 12% as well, and the S&P is at 11 over 11%. The Nasdaq is actually trailing these guys. The Nasdaq is up only under 4% for the year. Wheat, maybe you can go with John Deere, another one. Cattle, maybe Tyson Foods. You would have to do your research and find out. I'm just going off the top of my head. Some of the stocks that have liquidity in their options that have correlation to these. Um, The dollar, where's the dollar? I don't see the dollar here. USD is pretty flat for the year. Silver's up 4% for the year. Gold is actually down 3% for the year almost. And we've had some inflation pickup. Normally, gold is a great inflation hedge. So, gold was up yesterday up to almost 1850. The 30-year bond is down almost 10%, and the 10-year note is down 4%. Um, as rates go, so if rates go higher, bonds go down. If rates go down, bonds go up. So they're inverse. The VIX is down 19 year to date. And that's pretty much a recap of the markets and how to beta away your portfolio. I'll do some videos on individual names and what I saw for the earnings this week. Um, but I think there might be some opportunities in the tech sector um, on this pullback. Um, Anyways, like the video, share it, subscribe, and I'll see you in the next video.